Welcome. In this video, Xcn coin price started to rise. We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. One of the important structural formations that stands out on the chart is a downtrend line that has already formed prominently. In the past, this trend has shown that the price has been moving in a downward trend by continuously making lower highs. That is, every time the price would rise, it would face selling pressure before it could reach its previous high and would fall back to lower levels. This was a classic downtrend pattern, indicating that the market was under pressure at the time and that buyers had not yet gathered enough strength. However, as is known in technical analysis, no trend lasts forever, and downtrends end at some point by losing their strength. A similar scenario has played out here. After touching a long-lasting falling trend line multiple times, the price finally broke free from the pressure and managed to break it to the upside. This breakout should be considered a very positive development, not only technically, but also from a market psychology point of view. This is because such a breakout is a strong signal that traders are now starting to believe that the price will not fall further and that buying positions are gaining strength. Another noteworthy element in the price action after this breakout is that there was a sudden and strong upward acceleration. That is, as soon as the price broke the falling trend line, it started a serious upward movement in a very short period of time. This kind of movement indicates that a new mass of buyers entered the market after the breakout, and the direction of the price has now changed upwards. Since technical traders in particular treat a downtrend breakout as a buy signal, the positions that came into play at this point increased the volume, causing the price to skyrocket upwards. Such a scenario is also valuable for traders who use breakout strategies. This is because such breakouts often cause past squeeze zones to dissolve and trigger large price movements. In particular, the price structure, which has been under pressure for a long time and has been moving in a narrow range, can quickly react upwards as if it has been freed from its chains with the breakout. The price action experienced at this point reflects exactly this. In addition, the fact that the rise after this breakout was volume supported shows that this movement is not just a speculative fluctuation and is based on real buying interest. In technical analysis, volume rallies following breakouts indicate that trend reversals are solid and sustainable. This is a reassuring and positive signal for traders. The broken falling trend line may now have turned from a technical resistance to a support level. This increases the likelihood that if the price retraces, this area will now work as a line of defense and the price will continue its upward movement again by gathering strength from here. This technical situation is known as a change of polarity and is often observed after successful breakouts. On the other hand, this breakout and the subsequent bullish move also provides important information about the overall structure of the market. Breaking such technical levels, which attracts the attention of large investors and institutional players, often leads to new position openings. This increases the sustainability of the price action and may lead to continued upward pressure. The strong momentum following the breakout also proves that this move was not a random bounce, and that the market has now entered a different phase. When all these developments come together, technically, the break of the downtrend should be considered as an extremely positive structure. This breakout is not only a short-term move, but it can also be an important indicator that the trend is changing direction in the medium and long term. But we cannot decide the analysis only with trends. Let's look at other metrics. Stay tuned. The Elliott wave theory assumes that price movements move in waves in a certain pattern. This theory provides traders with a unique tool to understand how market psychology is reflected in prices and to predict possible future movements. In the current chart, we are in the third wave of the Elliott structure, and the price action has reached a critical level of 1/618 according to Fibonacci ratios. This point is considered a frequently targeted area in technical analysis, especially for the third wave. This is because, according to theory, the third wave tends to be the strongest and longest lasting wave, and often overlaps with the Fibonacci extension ratio of 1/618. The fact that the current level has been reached within the third wave is a very positive development. This indicates that the market is gaining momentum and is moving upwards with greater strength than in previous waves. The second wave of correction that followed the first wave gave the market a healthy rest, and this third wave followed with an accelerated ascent to the 1/618 target point, reflecting the growing interest of investors. The price action up to this point points to a strong bullish trend, not only from a technical perspective, but also from an investor psychology perspective. This is because the market is now supported by a wider range of participants, which sets the stage for the upside to continue. If the price can break above this 1,618 level and hold it, rather than just testing it and pulling back, this would indicate even more strength in the third wave and a potential rise to 2,272, the next target of the Fibonacci extension levels. Reaching this level would not only mean the completion of a technical target, but would also confirm the typical behavior of the third wave. This is because third waves often represent periods of peak market euphoria, when traders say the train has left the station. This indicates that the price has the potential for a long-lasting uptrend. Fibonacci extension levels are used in technical analysis to estimate how much higher the price can go compared to the previous wave. Particularly high levels such as 2,272 often occur during strong market trends. Reaching these levels requires a strong momentum in the market, and the current structure shows exactly that. Crossing the 1,618 level shows that buyers are gathering more strength and confidence in the market is growing. This is an indication that investors are still increasing their positions in the third wave. The current structure shows that the price is rising in waves in a healthy manner. This suggests that we are in a sustainable trend formation. The fact that the price is correcting and then making new highs suggests that market dynamics are working well and the uptrend is supported. Such volatile and measured movements show that the market is not speculative, but technically and structurally strong. In addition, investor psychology is another issue to be considered at this point. Such a strong third wave will boost investor confidence and trigger more people to participate in the market. This may contribute to the extension of the third wave and reach the 2,272 level. This is because new market entrants usually trade in the third wave and market volume increases during this wave. This widening interest sets the stage for the price to move higher. If the price crosses the 1,618 level with a strong candle and then tests this area and turns it into support, this will paint an even more positive picture. In technical analysis, when a level works as support after a breakout, it is a confirmation of the strength of the trend. If this scenario materializes, it would make it much more possible for the third wave to extend and reach the 2,272 level. This would raise investors' hopes for higher targets and further strengthen the buying appetite in the market. The RSI indicator is an extremely important tool that measures the strength of momentum in the market and provides insight into the direction of the trend in particular. In the current chart, the RSI indicator is showing a downtrend structure that has been in place for a long period of time. This structure represented a period of investor indecision, price compression, and weak market momentum. But now that this downtrend has been broken, it signals a strong and positive shift in market structure. Such a downtrend breakout is not only a technical breakout of a level, it's also an important clue that market psychology has changed and buyers are now more dominant. After crossing this falling line to the upside, the RSI didn't just make a sudden breakout and fall back into the old trend, but it returned to the broken trend line and tested it once again. The fact that during this testing process, the RSI line touched the falling trend line that it broke and continued its upward journey indicates a very positive and constructive picture. This kind of breakout and subsequent retest pattern is considered a very solid structure in technical analysis. This is because a retracement to the broken trend line indicates that the old resistance has now become a support and a new uptrend has started with the strength from this support. This is why we should follow the RSI trends. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.